The third and last category you're going to see on a cash flow statement is cash from financing. And usually it's from financing, not to financing. However, there are some times where it's to financing as well. You see, cash from financing really only cares about long-term liabilities and your equities. Pretty much, how are you going to pay for all that cash from investing stuff you just talked about in the last video? All your PP&E. You see, anytime you issue a new loan, you give out a loan and you get a ton of money. All that cash you just got in your loan is calculated and tracked in the cash flow statement on the cash from financing area code. The same thing goes with stock. If you issue a whole bunch of shares of stock and you get a whole bunch of money back from investors, all that money is tracked through the cash from financing category. So usually this will be a very big positive number, especially if you're making a lot of investments. Making a lot of investments, you may not be able to use the cash you made in normal operations to pay for all those. So you hope to see the cash from financing section grow just about as fast as the cash from investing decreases. So if I spent $100 buying new property, you're going to see that on my cash from investing area. If I had to take a loan out, which say I did, to do that, you're going to see a $100 increase in cash from financing. Those are kind of things that happen on the cash flow statement that show you where money came in and where money came out of your company. However, it can be possible that the cash from financing is actually negative. That would be times when people are actually paying off debt, or they're repurchasing shares of their stock on the stock market. And that would happen if the company says, hey, we have a ton of cash from our operations, enough that we can actually grow with it. We don't need this loan anymore, so let's pay it off. Or we actually can buy some back of that stock, so we own more of our company than we used to, so let's buy back some stock. These would be negative cash outflows because cash goes from the company to outsiders. Anytime that happens, we're going to see a negative sign on the cash flow statement, no matter if it's in operations, investing, or financing.